I recently made a video where I talked about why I wait for top and bottom wicks before I enter. This was a short video and did pretty well, but in the comment section there's a lot of confusion. This led me to make this video to explain exactly why I wait for top and bottom wicks and how to treat no wick candles in the markets here. Because for me, waiting for these wicks and knowing when to wait for a wick and when not to allowed me to increase my win rate by 10%, as well as avoid drawdown and get way more accurate entries with more confirmation. And I found exactly how this could help me in my journey, and I want to share it with you guys in this video. So we're going to dive deep into that, and if you find it interesting, definitely stick around. So let's get that. So we're going to get straight into this and break down exactly why it's important to have top and bottom wicks. The first thing I want to show you is how important it is in higher time frame. Here's an example from this week's stream, right? You can see that this 4-hour candle, if you zoom in here, you can see there's no bottom wick on this 4-hour candle. Now this session looks immediately bullish, right? If we were to play, you can see that a lot of things are pointing towards the upside in this session. If we rewind to then what happens, and we can see that actually what ended up happening with that 4-hour candle is this whole thing reversed the session. Where this line is here is actually the 4-hour no bottom wick. You can see the no bottom wick. So 4-hour eventually came down, and there you go, boom. Ended up being one massive fake out, and that was it, right? Made its bottom wick there. Now, if we actually go to the charts, we can see how that fake out actually happened. And I can show you that from the charts here. So let's go ahead here and look at like 15-minute, and we can see that happen to where there was no bottom wick on the 4-hour and how we actually flipped. So this was the 4-hour open, no bottom wick. And if you look at structure, this would look extremely bullish. We have higher lows, higher highs, right? We have structure formed here. We can see we've been forming upwards, but there was no bottom wick, ended up making its wick here before continuing bullish, which was the bias for the days. Later we took buys here. This is my point, is that before it could execute on the buys for the rest of the day and continue up, it needed to make a bottom wick on higher time frame. So let's talk a little bit about that. Why is it important? Well, if you've just glanced at a chart, you've noticed that most candles have top and bottom wicks. The higher time frame we go, the more important it is to have a top and bottom wick. So in my trading journey, this is how I discovered it. I noticed that when I was entering trades without top or bottom wick, so either I'm entering a buy that has not made its bottom wick, it has not flipped down first to make a bottom wick, right? So if I was entering a buy looking for price to continue up and it hasn't flipped first to make a bottom wick, then flip up, I was noticing that I would get into profit sometimes and then get in drawdown, and that drawdown can hit my stop loss. And that's exactly what I didn't want to avoid. So you need to start reading candles backwards. What happens when we make a bottom wick? What is a wick, right? So that's the first thing we need to understand, is what is a wick and why do we need one? Well, when a candle opens and makes a wick, so let's talk about a 15-minute time frame, that wick will be either a retest to something or it will be on lower time frames candles. So when we open without a wick, that means a 1-minute candle just opened, 30-second, 1-second candle opened without going down first. It's opened with straight volume up. Although it sounds beneficial on paper, and I was getting a lot of people in the comments of that short saying, that's not true, it indicates momentum, this is BS. No, it does indicate momentum, but the problem is that unless you're taking a momentum based trade, meaning you're scalping on extremely low time frames, which I don't agree, then it's going to affect. And the real effect comes into higher time frames, because that's where probabilities lay. Probabilities lay in what's going to happen more often on the charts. So I think we can all agree here that most candles on the chart do have top and bottom wicks. So the probability of price making a wick is going to be there. Now, of course, there will be some candles with no top and bottom wicks, but that is something, a randomness on the chart. If more candles have top and bottom wicks, it should be something we wait for, especially if it can avoid uncertainty, give us more probabilities and more confirmation. And lastly, it can also remove randomness in our trading, which is the beauty of a strategy. We don't want to be stopped out. Now, I can't rewind on this to show you an example of this, but this is where I can utilize our backtesting simulator that we have called Pip Labs. This is our own backtesting simulator, and it allows us to see tick data. A lot of backtesting simulators don't allow you to see tick data. You can only skip candles, but I can play candles here. So all I'm going to do here is I'm going to put this on a 1 minute, not 1 minute, on a 1 second, so we can see each tick. This is a 1-hour close coming into London session here, 10 a.m. my time, which is London session. Watch what happens here. If you're a buyer here, because we've created support, we started to break through the buy to the highs here. In terms of people commenting and people questioning, saying, hey, no bottom wick means momentum. Well, let's see what happened. There's your no bottom wick. Yes, there is momentum. You FOMO into buys. Say now you start taking buys here, right? This is your buy. You start taking buys here. Maybe you go down on a 15-minute here. There's no bottom wick. You took it, break of this previous high. Anticipating to continue bullish. and you put your stop loss maybe something like this, okay? Ideally, it should be below here, okay? Below, of course, some sort of structure. You want to be running good stop loss and TP wherever, right? That's your plan here. Now that you FOMO'd in, you don't anticipate it. But for me, this is lack of confirmation, because why? This could be a liquidity grab up to grab liquidity to flip down and potentially reverse from this spot. Even though price doesn't indicate that it should reverse, that's how reversals can happen, and that's how you can get caught in fake outs, is because price has not gone down, retesting or proving to you it wants to go down first before coming up. And I'll show you the difference here. So if we play this candle more, so it's going up, you're all happy, oh, this is great buys, I'm ahead of the position, and now it starts to make its bottom wick. So this is where I start to get interested, because now it's made a bottom wick. This is where it's made a bottom wick, and now it's giving me confirmation. This confirmation is simple retests. If you go onto lower time frame, you'll notice that this bottom wick will go and retest something. Watch this. So now the bottom wick is made, you're in heavy drawdown, almost stopped out. This is the fine line that if the market wants to be nasty, it will stop you out, right? You get stopped out and you lose the trade, and then your idea plays out later. How many times has that happened to you in the markets? I'm sure multiple times. So if this is a fact that we can remove that randomness from our trading and win more times, why wouldn't we include it? Which is why I always wait for top and bottom wicks. So if we look here, right, what ends up happening? Boom, you get saved by the bell here, right? You get saved by the bell. Now I'm interested to enter now rebreak of the high, which is where my entry would come, all based off the 1 hour idea. Now that it's made, its bottom wick is made, I can enter on the original position after a bottom wick. Bottom wick just ends up being a retest, right? And now you can start to take a position, okay, and take it how you originally planned with the bottom wick confirmation. Same type of stop loss. Now, obviously, this is just an example I'm showing you here, but it would come with the original plan. This is just a clear example. I just opened the simulator and found nearest day, and you look for something like that, obviously targets and stuff. But now bottom wick is made, you can get triggered into position. Now look at the efficiency of the move. No drawdown, confirmation extra, and this happens time and time again. You can watch my streams, you can go and check my entries that I have on my streams on YouTube. In the description is my journal with all of the videos of my entry exit TPs. You can see how I wait for bottom wicks and how it avoids me drawdown. And notice how if price wants to continue up, it should respect that low it just made. And now you should be able to continue up bullish, because what did that wick do? Not only does it come down to give you more confirmation, it's also a form of grabbing liquidity. What is liquidity? Liquidity is structure. Price going down before continuing up is creating something called structure. And if we want to continue up in a nice fashion, we want structure, because if we continue up vertical, that's where we can get the heavy pullbacks. And if your entries are somewhere here, it's where you can get messed up. Guess what a vertical push is? A vertical push is a candle that opens with no bottom wick. Same thing for sells, just flipped the opposite way. So, right after this, stick with me. I'm going to explain exactly how to implement it and how I implement it in my trading. But I want you to show the examples and show you guys how this kind of makes sense. So we can skip here candles just to see that price eventually did end up pushing up there, and you can close the trade there and be done. So you can see the difference between waiting for a bottom wick and not waiting for a bottom wick. This is a clean example. Now I want to show you how you're going to actually implement that on the chart, right? Because it's going to be very important to implement that on the charts, as that's where you're going to use it. So understand the probabilities. When you do your top-down analysis, when I come to the markets, I analyze from the daily down. Analyze from the daily down. If my daily candle does not have top or bottom wick, I consider that a probability that at some point during the day it can flip. Same with 4 hour. The example we used at the beginning of the video, right? The next time, and this is the most common time I use it, is when I'm looking for my entries. My entries are not on super lower time frame, okay? And I'm going to explain two things now that are going to be extremely important. The first thing I'm going to explain is, if you're taking a trade based off a 1 hour and a 15-minute doesn't have a bottom wick, it doesn't really matter, because you're basing your trade off higher time frame. Higher time frame bottom wicks and top wicks matter, not lower time frame. We care about higher time frame top wicks and bottom wicks, not lower time frame when entering, because lower time frame will always have 1 minute, will not have top and bottom wicks, and sometimes it's good. It will give us a nice volume push to TP, no bottom wick. We don't have to hold through that. But in our actual entry, we do want that. And my entries start from the 15-minute time frame. So I need a bottom or top wick on a 15-minute time frame when I'm looking for an entry. So an example of my entry would be, let's say I'm looking for a close above a zone. Okay, I'm looking for a close above a zone, so we'll draw this box here as my zone. and now I'm looking for a simple candle close above to take a buy here. If I'm looking for this buy, I need the next candle to open, make a bottom wick, and then flip and break the high as well. That bottom wick will give me confirmation. Doesn't have to retest the zone, but that's what I want to see, because I don't want to get caught out in what? I don't want to get caught out in price. First of all, get late execution to where price opens up quickly, triggers me in, and I'm late entry just to flip and do this. Just to flip and do this, right? This would be extremely a bad scenario here. So realize that top and bottom wicks, as we go down in time frame, the higher time frame will make a wick for us most of the time. So what I mean by that is that if we have wick on 30-minute, we have wicks on 1 hour, we have wicks on 15, but no wick on 5. We don't need to sweat about that, because we can rely on the higher time frame that made the wick, that grabbed the liquidity for what we need to enter the trades. So same thing comes for sells. I want a top wick. Now, size of the wick, I just need a wick. So understand the concept behind that. It does not apply to super lower time frame trading, but understand it is a method. It doesn't mean that you cannot take a trade without a top or bottom wick. There are certain scenarios and certain assets. If you're a trader who's trading stocks, if you're trading indices that move faster, yeah, top and bottom wicks won't really matter around market open, because market open, we expect a massive amount of volume. But if you're trading stuff like gold, and you're trading stuff like 15-minute time frames, you're trading around the market open, not at market open, yeah, you will care a little bit more about having that as an extra confirmation. And that's how I used it. Now, over all my trades, when I added this concept to my trade, it added 10% win rate to my positions. Now that was massive. I used to have around a 70% win rate. When I added this, it moved it up to 80%. If we go look at my stats, this is all live stream stats, we can see, it's hovering around 75% win rate, which is good. 75 win rate will do. Hovering between that 75 to 85. Now that does mean that you do miss some trades, because sometimes price just opens up no volume with full volume and ends up continuing. But I want to reduce that randomness and have more confirmation. As a trader, I prefer more confirmation rather than more randomness as my trading, as that will protect me long term. So I hope that this video has helped. I hope that this is useful. I hope you found something that clears up the reasons why I wait for a top or bottom wick when I'm taking a trade, and why candle wicks are important, because they are a randomness in the market. We want to avoid randomness, and that's exactly why we trade. So that's exactly why we have a strategy. So if you're interested to see how I enter my trades, I recommend you watch the video that is going to come at the end here. Use that video to help you to identify my 4-step method for exactly entering the market, and you can take it from there. That links to some nice videos, so definitely check out that video. Leave a subscribe to the channel and a like if you enjoyed the video. That being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.